Tax time's coming, and there's several ways you can file your tax return. Which one are you going to choose? Hi, I'm Dave Lopez.
And I'm Chase Lopez, and we're with ILG Financial. And this is another episode of Retire Your Way with ILG Financial, where we talk all things retirement planning. Now, before we jump in, Dave, just want to remind everyone, go ahead and hit the like and subscribe button below, just so that you can be alerted for any future videos that we put out.
Yes, sir. Like and subscribe.
That's right. That's right. So today we're talking about taxes. It is tax time.
Yes.
And what's the best way to file? There's multiple different ways you can file with your taxes. So why don't we start there, Dave? What are the different ways that we can file our taxes?
Yeah, so all aren't available to everyone.
Correct.
Right? So you can file, if you're just a single person, you can file single.
Mm-hmm.
You can also file head of household. That would be if you're single, but you have a dependent. That gets you a little bit higher standard deduction.
Right.
Of course, if you're married, you can file married. It's called married filing jointly. So you combine everything into one tax return. And you can also, interestingly, file married filing separately.
Mm-hmm.
Right? Did I get them all?
Yep. And then the qualified surviving spouse as well. You can file that way.
Yeah,
qualified. That's very unique, right?
Yeah, that's if somebody passes away and it's just the 1 year.
That's right.
Right.
That's right.
The year of the death and 1 year after the death, which we're not going to get into today because that's such a unique system.
Mm-hmm.
What I would suggest is if your spouse has passed this year or last year, right, or if you think that is an event that might be pending in the immediate future, get with your tax professional or your financial advisor so you can start planning in advance to see if that filing status, surviving spouse filing status, it might be something that you want to take advantage of over this 24-month period.
Yeah, so one of the biggest questions we get, because single is kind of self-explanatory, right? And you did a good job of illustrating head of household. That's a very unique kind of situation as well. But one of the biggest questions that we get is, hey, we're a married couple. Should we file married filing jointly, or should we file married filing separately? So we'll kind of touch on a little on each of those, right, and what the difference is and how it may be advantageous to do one over the other. So why don't we kind of start there, Dave? Those two different ways. What's kind of the difference between those two?
Yeah. So I think the takeaway is that by design, it's designed not really to make a difference in almost every case. Does that make sense? And because otherwise everyone would just gravitate to the one that was the best fit.
Right.
So for almost 90% of the public, that's my guess of the number. Most of the public married filing jointly is really the way you're going to go. You're not saving anything. And let me give you a couple examples of that.
Mm-hmm.
We get a standard deduction, and as of 2023, it was 27,700?
Yep.
It's a little higher for 2024, just for inflation. But if you file as a single or married filing separately, they treat it like you're single. The standard deduction is exactly half.
Right.
So if you're both filing separately, it's the same standard deduction.
Right.
Another thing that doesn't come up as much, which we want to mention, is this is what our tax code in the U.S. is called a progressive tax code. And that's just fancy talk for saying that the more money you make, the extra amounts are taxed at higher buckets. And I don't think I did a good job explaining that. You want to kind of walk through that stair step?
Yeah, so think of it a lot like a graduated cylinder, right? So when you file your taxes, sometimes there'll be a line on there and it'll say you are in the 22% tax bracket. Well, that doesn't mean you're paying 22% on all of your money, right? You get the standard deduction, to your point, the first $27,700 for 2023. That's not taxed, that's a deduction. And then the next level, the next bracket is 10%. So the next so many dollars get taxed at 10, the next so many dollars get taxed at 12, and then only the last dollars get taxed at that 22% tax bracket if you're in the 22% tax bracket. So for married filing jointly, or conversely for married filing separately, just like with the standard deduction, they just cut those tax brackets in half. So there's really no advantage to doing separately as opposed to doing jointly.
Yeah, in fact, it could be to your detriment to file it separately. So let's give you an example of that. Let's say one of you has an income of $300,000, and one of you has an income of $10,000.
Right.
Well, if you filed separately, the person with $300,000 would be in those lower brackets you talked about, so they would more of their $300,000 would be taxed at the higher brackets.
That's exactly
right. 32 and 35%.
Right.
Whereas if you combine the income, now it's only $310,000, right? But you've doubled the bracket. So overall, that 310 is going to be taxed much less. So that's why most of the time you're better off filing jointly.
Right. And I think we pulled some statistics. I think for married couples, only about 2% file married filing separately. So it just goes to show you it's very unique where you would actually file separately as a couple, as opposed to filing jointly.
And we can't go into all the possible. It's very unique. I think that's a great verbiage there. So you'd want to get with your tax professional. What we can do is go over 2 or 3 situations where it might be worth addressing with your tax professional to see if it is a benefit. These are the 3, I would say, the ones we hear the most. Would that be fair?
Yeah.
All right, so let's walk through those.
Yeah, so the first one is if you are a married couple but you're separated, and that's kind of the first step to divorce is being separated. You may or may not, may or may not be advantageous to file married filing separately in that situation.
Yeah, and it's for really not for tax financial reasons, right? You may actually end up paying a little more tax depending on how, but it might be because of the separation and the divorce.
We're separating
for the whole piece of keeping things separated for the divorce proceeds. It might make things cleaner. So that's one reason to do it. Another reason might be that, let's say you're eligible for some credits like the child tax credit. Right, you usually get if your income's below a certain level. And what's the other? Dependent care? Dependent care credit is another credit that you actually get a credit for taking care of a child, for example, right? But your income has to be below a certain amount. Those 2, it might be beneficial to file separately. So one of you, if your income's low, you would qualify for that credit, and your spouse's income wouldn't disqualify the credit.
Yeah, and I think that's applicable for any sort of income-based benefit that you could get, whether that be a tax credit or something else.
You'd have to weigh that, though, against, you might end up, the other person might be paying much higher taxes because of the brackets we talked about. So your accountant would have to do the math and say, is it worth it? But that's a situation where it might benefit some. And there's one other. What's the other? I can't recall.
The last one is if...
student loan.
Student loan, that's right. And that kind of is lumped into the same category that we just talked about, where you may get a benefit on paying a little bit less on your student loan because your income is below a certain threshold. So it may be advantageous to file separately as opposed to jointly there. But going back to the top of what we kind of talked about, it's a very, very small piece of the overall pie that end up actually filing separately. So big picture, you want to make sure that you get with your tax professional prior to making a big adjustment as to how you're filing your taxes.
Yeah, and if you're paying someone to do your taxes, they should not hesitate if you ask them to run it both ways.
Yeah.
They can just put it in their computer, run it both ways, and see which one's more beneficial for you.
Yeah, so that does it here today for Retire Your Way with ILG Financial. Again, hit the like or subscribe button down below, and we'll talk to you soon.
Talk to you soon.